What's going on, traders? Welcome to today's video. So in my last video I talked about some of the reasons most traders aren't profitable, and before then I made a video on how to create a profitable trading strategy. If you haven't seen those videos, I'll put the link somewhere on the screen and also put the link in the description down below just for you to go check them out. So over the next few weeks I will be putting together a beginners playlist, and this happens to be the first video in the playlist. So by the end of this video you should be able to understand how to read a chart, but before then let's roll the intro and get straight into it. Welcome back, guys. If you are not subscribed to the channel, make sure you subscribe, and also don't forget to leave a comment in the comment section and give this video a thumbs up. So understanding how to read a chart is very important, especially in the financial markets. Now, whether or not you trade the crypto, forex, indices or commodities market, every trader utilizes the charts and other resources when it comes to making trading decisions. Charts are basically historical and current price data bundled up in a bar or a candlestick depending on your preference, and there's three popular types of charts, okay? But our main focus would be the candlestick chart because that's basically what every trader uses. Starting with the line chart, this is what the line chart looks like. Just in case you're a new trader and you don't know the software I'm currently using, this is TradingView, and you can sign up for free on their website and you get to use their software for free. It's a very wonderful software that I recommend for every trader. So the line chart is probably one of the easiest charts to read and understand because of its simplicity. It only displays the closing price of an asset over a period of time, presenting the trader with an uncluttered chart and an easy to understand view of an asset class. But it also has its disadvantages, and some of it could be the fact that it does not present the trader with vital information such as the open, high, low and close of an asset. So you might just reconsider using this chart for your analysis. And just in case you're wondering what the open, high, low and close means, I would also be explaining that as we get deeper into the video. The next chart we're going to talk about is the bar chart, and unlike the line chart, the bar chart actually displays the open, high, low and close, and I think I'll use this to actually explain the open, high, low and close concepts. Taking a closer look at the bar chart, it really looks very funny to me because it looks like a scarecrow. Okay, so unlike the line chart, the bar chart actually displays the open, high, low and close, and I think I'll use this to explain the open, high, low and close concept. So taking a closer look at the bar chart now, let's just analyze one bar, and you'd see that there is a vertical line and two horizontal lines that look like a dash. These two short lines at the side of it. The vertical line actually represents the highest point price has reached and the lowest point price has reached, but that depends on the time frame. Okay, I would also explain time frames by the end of this video. So the two short horizontal lines that you have on both sides actually represent the open and closing prices. So if you look closely, there's one on the left and one on the right. The one on the right actually represents the closing price, and the one on the left actually represents the opening price. Basically, this dash here you have is where price opened. This represents the highest point price reached during the session, and this actually represents the lowest point price has reached before closing for the session. Now on my right, you could actually see that the open price for this candle is actually lower than the open price of this. So when you have the close of the candle above the open, it is simply referred to as a bullish session or a bullish candle. The next chart I'm going to talk about is the candlestick chart, which is in no doubt the most used chart in the financial market. Now this chart also displays the same information as the bar chart, except they don't really look the same. So the candlestick chart has a body. Okay, this is the body of the candlestick, and also has different shapes and sizes. Now when we take a look at an actual chart, you would actually notice that the candlesticks have different shapes and sizes that mean different things, and I would also explain what that means in subsequent videos when we go deeper into understanding candlestick anatomy and candlestick pattern. So let's take a closer look and study the intricacies of the candlestick chart. So first, you can actually see that it has colors, which actually makes it look really exciting, and it is usually red or green depending on if the stock or the asset has a higher close or a lower close, and it also depends on the colors you select, because on your charting software you're going to have the liberty to change some of these colors to the one you actually prefer. In order to determine if we had an up day or a down day, when the candle actually closes above its open, it is said that we have a bullish day, and when the candle closes below its open, it is said that we have a bearish day. The open high and the closing prices are the most relevant information to you, and that's what you really want to pay attention to. For example, on this candle we had price open, and this low represent the lowest point price reached for the session. This high represent the highest point price has reached for the session before price finally closed. Whenever you have price open and close, when the close is above the open, it simply means we had a bullish day. That is to say, the bulls were in control, depending on the session or the month. So it depends on the time frame you're actually looking at. Now I would also explain time frames in other videos just so you understand what I'm talking about, but for now let's just focus on understanding how to identify a bullish and a bearish candle. When you have price open and close below its open, it simply means the bears are in control. The advantage of a candlestick chart is that it provides us with so much information, which I talked about. That's the open, high, low, and close, and it also provides trading opportunities for swing traders and even day traders. So let's go ahead and look at an actual chart so you understand what I'm talking about. On this software that I currently use, if you want to switch your charts, you could actually come to this area here and click on it. Now you have the line chart. This is what the line chart looks like I showed you at the beginning of the video. Very simple, easy to use chart, but the only disadvantage is it doesn't give us the information that we need to make trading decisions properly. So the next chart is the bar chart. It doesn't really look clear on my screen because of the colors I used. I have never used this chart to make any trading decisions, so I don't really pay attention to it. The candlestick chart is the most used chart. Now, just like I said before, I have a different color from what I showed you guys earlier on because I was able to modify my settings. So the most important thing you are interested in the candle is the open, the high, the low, and the close. So I'm currently looking at the 30 minutes time frame. Now this simply means that every candle on this chart currently takes 30 minutes to form. Okay, every candle here takes 30 minutes to form. From the open to the closing price, it takes 30 minutes. Now if you simply look at the monthly time frame, it takes a month, 30 days for every candle to form on the monthly time frame. From the open to the close, it takes a month. So currently you could actually see that we have a candle that's still forming. This is a monthly candle, and you could actually see that we have 18 days and 22 hours for this candlestick to close. Another thing I would like to point out to you guys is when a candlestick is still open, that's when it hasn't closed, we do not really know if we are going to have a bullish or bearish close on the candle because we just don't know. I mean, no one knows what happens in the forex market. We're all speculators and trying to predict where price would actually move. So this candle, as long as it hasn't closed, can move all the way down and, you know, move all the way up. Another thing I would like to point out on the candlestick is this long wick you actually see here. There's this thing you see poking out of both sides of the candle. This is actually called the shadow of the candle. Okay, this actually tells us the highest point price has reached. So looking at this candle now, you would actually see for this particular month, this is where the candle actually opened, and this is where the candle actually opened, and this is the highest point the candle reached, and we could actually see that this close is actually lower than the open. So this is a bearish candle. So the easiest way to actually identify these candles is to use a different color. But basically, when you get experienced, you don't even need to have different colors to understand how these candlesticks open and close, because this is a bullish candle and it closed here. So where this candle closed is the same place this candle opened, and you actually see we had a bullish candle. So this candle closed bullish and opened here for the next candle, and we can see that the low is actually lower than the open. That we can see that the close is lower than the open. So this is a bearish candle. So just to recap, there's 4 things you want to pay attention to in a candlestick. That is the open of the candle, the high of the candle, the low of the candle, and the close. The open is where the candle actually opened. The high is the highest point the candle has reached for the session or the month. Just as we are looking at the monthly time frame, this is the highest point price has reached for this month, and this is the lowest point. So currently looking at this candle, this is the highest point price has reached for this candle. Let me zoom in closely so that you get to see a closer look at what I'm looking at. So this is actually the highest point price has reached. As long as we have not closed, we do not still know if this is going to be the highest point. Price can decide to move even higher than this. Okay, wherever it is price wants to go, it has the liberty to go there. So for now that the candle hasn't been closed yet, this is the highest point price has reached, and this is the lowest point price has reached. So I hope you understand everything I talked about in this video. If you have any questions or just anything you aren't clear about, let me know in the comment section. And don't forget to like this video, don't forget to subscribe, and check other videos in the channel.